And that is not a good sign. It is not a good sign. So over the years, we still continue to face a lot of challenges as relates to inflation. Food insecurity has been one of the most pronounced ones in Nigeria. We are seeing rising input costs. We are seeing low production yield for crops, persistent insecurities, and a lot of other issues that have also come up within this period. So we are seeing inflation going up. Things are becoming much more unaffordable. Purchasing power also is remaining largely weak because of the lower real wage growth. Now, oil production here is very crucial because it's one major source of revenue for the government. So it's very important, and that is why you see many people talk about oil production. Oil production target was around 1.78 on the budget, but so far we have not been able to meet up with our target. Even during the year, you would have seen, or if you check the numbers, it has fluctuated time and again, but currently we pegged it at 1.5 million barrels per day. So that means us not meeting up with the target means we're not getting enough money from that side. So while the oil prices has remained largely in line with our projection, oil production, on the other hand, has not been able to catch up, which means that we will not be able to meet up with the revenue allocated to it if we cannot catch up with the production. Then, of course, exchange rate. Exchange rate was projected at 800 before the year, but we've seen moves by the current CBN governor, Dr. Cardoso, trying to unify the economy, boost confidence for both domestic and foreign investors, and for different reasons, which we'll also see during the course of the presentation, to try to bring more people or bring more foreign investors to the country. But it has not really panned out like we thought it would, right? So we've seen exchange rate go as high as 1,800 this year and still come down to as low as 1,100, while now we are seeing it somewhere at 1,586. And this is even using, the official rate in the market. So that said, the main point here is that nobody, absolutely nobody, is spared from the current inflation trend in Nigeria. It comes with a lot of uncertainty. There's struggle to meet up with the rising price of things, and inflation on its own is even devouring the cash that we have, diminishing the wealth or the worth of the wealth that we have. We just try to put that in picture and, reminisce on some of these things that we typically would have access to, and I probably have wastefully used some of them before. And now, it's coming to us. These numbers are not even updated because I'm sure most of us will be like, this is not the price I got tomatoes last time when I went to the market, or even meat. But the point for this is you will notice that prices of things have more than doubled, for most of the commodities that we use. And we try to paint a clear scenario of how your money would what your money would have returned with and without investment, taking into note the cost for inflation, right? So assuming you had 1 million naira, July 2023, at two different scenarios. You did not invest that money at all. And let's just say you kept it in the bank. And the second scenario is that you invested at a rate of 18%. Now, I know that if you keep your money in the bank, you're going to get interest for it. But the assumption here is there are some charges that we get, some transaction charge and SMS charge and all of that. I want to take it that they net of each other, right? So nominal return is 1 million. So because you kept 1 million, you still have your 1 million in the account. But if you had invested that money at 18%, you would now have 1,180,000 naira. Now, this is nominal. We have not accounted for inflation yet. Now, when we account for inflation, that's when we talk of real returns. When we look at real return now, your 1 million naira that was not invested will now give you 745,212 naira. While the 1 million that you invested will now give you 879,350 naira. What this scenario tries to paint is not a case that you will be able to get the initial amount no matter what is happening. The point is, if you keep your money invested at all times, you are sure that the eroding effect that comes with inflation is not going to take all of your money with it. So at the end of the day, you are always going to be better off staying invested. We also try to, paint a picture, for us to just see what has happened to the Nigerian FX market. I'm looking at both official rates, parallel rates, and the reserve before it converged this year. So this chart is, I think, almost 10 years, if not more. So from 2010 till July 2024. And what you notice here is, like, I did mention there was a convergence in terms of the official rate and parallel rate sometime this year, which is the golden line and the blue line. You notice that there's that convergence, and up to now it's still almost the same on both ends, right? But because of all of the responses that we have gotten so far and everything that's been going on, right, both in trying to bring in FX, so that's looking at capital importation number, which is quite interesting. If we look at capital importation number for Q1, it was very impressive, right? But taking a deeper dive into the numbers, like foreign investors are coming, we are happy, but where is the money going to? You'll notice that money had been going into portfolio investment, and portfolio investments are more like putting money in money market instruments. They are very short term. The ones that are not going into portfolio investment are going into loans, and loans in itself are also, short term. So that means these monies will be maturing soon. They are not long-term money. And then we still have to start thinking of how we want to retain them in our system, or how we want to pay, these investors. So that's also another, hurdle for CBN to cross. Apart from that, we're also, spending from our reserve. So you can see that reserve trend. So even though we have gotten some monies from World Bank and other institutions, right, you can see that we need to grow the traditional means of bringing in FX. And by traditional means, we are talking about remittances, we are talking about oil, and, even capital importation, but we need it to come into foreign direct investment, where they're actually coming here to set up businesses and not leaving the country, or investing in short-term instruments where they still have to take out their monies. And GDP here, just a more pictorial view, the 3%, which is 2.98% we had in Q1, how it was distributed, oil sector accounting for most part of it. But like we mentioned, there's still a lot of risk associated with it. And there's a lot that we still need to do if we want to meet up with the 3.88% target, which we don't think is possible. Our target this year, we believe, is 3%, which closely aligns with what IMF already projected at 3.1%. Now, that's out of the way. We want to get to the nitty-gritty, actionable strategies that we believe or we think can help you edge against inflation. And here we've tried to group them into 4 stocks: short-term fixed income, long-term fixed income, and alternative. So I want us to start with looking at fixed income market, general fixed income market. So fixed income market has been quite interesting. If you have been following all of what has been happening so far this year, coming home, MPR has increased rates. MPR rate has gone up by at least 800 bips. So we are now sitting at 26.75%. Now, what that number means to you is that when you are a new investor trying to invest in the market, you're going to be getting better rate for your money, right? So when MPR rate now is at 26.75, it will also reflect in the instruments in the market. So treasury bills instruments, even commercial paper, private companies that are coming to raise money, they also have to be very competitive. Then also the bonds market. So you see everybody also trying to readjust to reflect all of that increase, which means it's a good time, if you are not yet invested in the fixed income market, to bring your money and invest in the market. And there are different ways you can go about it. starting with the short-term fixed income instrument that is using Optiflex. The beautiful thing about the platform, Optimus platform, is that it is very rate reflective. So if you have been using the platform over time, you will notice that more recently, we sent out notifications to state that we have revised our rate and our rates are higher. So Optiflex is now around 13%. You can earn up to 13% per annum, and that is something that you can just take out your money at any time, bring it back in. So it's not like you're locking it for a long period of time. If you're looking at the long-term fixed income instrument, that's where I want to put things like mutual funds. I want to put Optilog and then bonds, right? For Optiflex, there's the Naira part, which is 13%, and then there's the dollar part, which gives about 4%, which is also very, very impressive. For the long term, looking at mutual funds have also been very reflective of the high rate that we currently have in the market. Plutus fund, if you are invested in Plutus, I'm sure you got your dividend notice to say that dividends have been paid, and even the rates are very reflective, currently above 17%. Same with the NIDF fund, which are bond fund. Bonds have also been enjoying from the high yield because whatever is happening in the market, we are all the markets are sort of intertwined, so nothing is happening outside a particular market. Then ADF, taking advantage of what the currency is doing, and you want to still invest in a mutual fund, you want a professional to manage your money for you, and you have dollars, then ADF is the fund for you, right? Also pay dividend. Optilog is also a very good choice. Optilog Naira and Optilog Dollar. Optilog Naira now gives as high as 20% per annum. Optilog Dollar as high as 7%, very reflective of everything happening in the market. So you are sure that here we have you in mind when we put out products, and we try to stay as competitive as possible. And we think that investing in the fixed income market is good, especially if you are one of those investors that you don't want anything to happen to your money. No, what I'm bringing is what I want to get back. Or Optilog or Optiflex would be a case of, I just want to know the exact rate I am going to get for my money, which is not something you can get with mutual funds, right? Mutual funds, you are not sure that this is the exact rate you're going to get when it's time to take out your money. But for Optilog and Optiflex, you are certain that this is the rate and you're putting your money and you are sure. So if you're risk averse, you don't want to take a lot of risk, then you should be looking at fixed income market. And like I mentioned, the market currently is providing a lot of opportunities for people that are not yet invested to begin to take positions, right? So we also have alternatives. And while we know that there are a lot of regulatory issues ongoing, we are also trying to see if we can work out something over time to have on the platform. There are different ways that you can actually tap into the alternative market, right? You can even use, ETFs to take advantage of that. And ETFs are almost like mutual funds. The only difference are that they trade on an exchange. So the way you can buy shares is the same way you can buy, ETFs. And we have some ETFs that are connected to most of these alternatives, like, currency, cryptocurrencies, commodities, and all. But like I mentioned, there's some regulatory issues, but we'll make sure that we check all of that box before, we communicate that to you. Now, stocks. Some people will say I saved the best for the last, but the stock market is a market I want to believe everybody should have an interest in, because it provides a lot of opportunity for you to diversify, right? Over the next slide, we're going to look at how to allocate, because I am one that will always say, don't put all of your eggs in one basket. Don't say only stocks or just fixed income. Try to do different things with your money, or make sure that your money is diversified, make sure your money is playing in different markets. But the stock market presents an investment opportunity or an option that I think a lot of people should consider. For the local stock markets, we know over time how people mention that it outpaces inflation from historic numbers. Even developed market stocks, right? It presents opportunity to get better return. And they not only offer the potential for currency appreciation because you are investing in dollars, but you also appreciate from the benefit that comes with price appreciation. And of course, some of these stocks do pay dividends. So while it offers you that opportunity to own or to be a part of a company, you also have the opportunity to hedge against inflation, and also allows you to actively participate in the economic growth of businesses while still helping you to stay diversified. And there's a very, very interesting concept that I would want people to take with them. If you have not been listening before now, I think you should start listening. And that is the concept of dollar cost averaging. And it is not as let's say tedious as some people make it sound. Some people make it look like it's one big deal, but it is not. The idea of dollar cost averaging is a simple yet effective investment strategy that helps you reduce the risk that is associated with market volatility. So it simply means that you are investing a fixed amount of money at regular interval, regardless of the asset price. So for example, you might invest $10 every month into a stock. And this approach just helps you buy more shares when prices are low, and you buy fewer shares, when prices are high, and average out your purchasing price over time. It helps you to reduce the risk of investing that large amount of money at the wrong time. Maybe you're not sure, is this the right time for me to be entering the market? Should I be actually, doing this now? You're not sure. It's a very good opportunity to do that. It can help you stay consistent in investing, yes, and can keep you disciplined. So Optimus also provides the opportunity where you don't have to have the entire money to buy one share. This is where the dollar cost averaging comes in. You don't have to buy one share. So with as little as $1, you can actually start buying shares on Optimus. And I'm sure we're going to show it when we are showing you the demo session. And I think you should take advantage of even the concept of dollar cost averaging. It does help you promote consistent investing, also reduce the whole emotional decision making. My friend said he bought Apple. Me, I want to buy Apple. You don't know what's happening to Apple. You don't know where the prices are going. You don't know anything about the company. All you know is your friend bought Apple and you want to buy Apple, right? So making those kind of emotional decisions and just buying things where you're not sure of the time, dollar cost averaging can help you keep all of that in check while helping you play an integral part in the long-term, investment plan or your long-term investment plan. And before I move to the next slide, there's something important, let's say a disclaimer I would like to put, which is that if you do not really understand the process or the value proposition of a product, I don't think you should be investing in it. If you don't understand what it means, if you're speaking to someone and the person is talking and you say, break it down, the person is breaking down, you still don't understand the breakdown. Maybe you have also done your research, you don't understand. And maybe it is not for you. Invest in what you know. Invest in what you at least understand, especially understanding its workings. Now, that said, we are going to be looking at a model asset allocation for investment. So here, we put more on the fixed income markets, like you note. So we have long-term and short-term, and together it makes up 60%. And that is largely because of the interest rate environment. We don't see this interest rate environment staying high forever, right? So we believe it's an opportunity for people to take advantage of. So as much as you can, take advantage of these opportunities, especially in the fixed income market. 10% allocated to alternative, high risk, high reward. That is the alternative for you. So hence why we put 10% there. Stock market also has high risk compared to the fixed income market. So we are also putting 40% there because we believe that it also presents opportunities for you to take advantage of. And thankfully, on the platform with as low as $1, you can actually get started with your US stock, trading or your US stock investing. Fixed income, long-term fixed income, take advantage of the mutual funds, take advantage of the bond market, take advantage of Optilock. You should be taking advantage of it if you are not already doing that. For short-term It's more or less like a high savings account. That's for the short-term one, right? So I think you should take advantage of it. Putting your money or just keeping your money just lying around. I've shown you a scenario that clearly states that your money should not be lying idle. So please start making your money work for you. And that said, introducing you to Optimus by AfroInvest, where we have almost everything you are looking for. The high yield periodic savings. We have the US stock platform where you can, buy stocks, you can sell stocks seamlessly, and you can also invest in the mutual funds. At this point, I think I will be handing over to Ayo for him to just show us how it works, and we'll take questions later. Thank you.
Okay, thank you very much, Victoria, for that wonderful presentation. So you've made my work very easy. And so the essence of this session is just to now show you how you take advantage of these opportunities on the Optimus by AfroInvest platform. So I will be using the web for the demo, and also works. You navigate it similar way even on the app. So so the first thing, because the focus here is some of the most of our dollar investments. So funding your wallet. So we've had a lot of questions. How do I fund my wallet? Can I bring in dollars? How do I transfer dollars to my account? So we have options that you can use. The first one is that you can be able to fund directly into the dollar account. So we have our DOM accounts, which we have GT Bank, Zenith, and UBA, where you can fund directly bank to bank, or you do bank to from your other banks to to those banks. Yeah, so that is one. When you fund, always also remember to upload the evidence of payment to ensure so that you initiate it on the platform so that it can be approved and you can get your funds in your wallet. So I'm currently displaying the wallet. So for you to fund your dollar account, you need to click on US stocks, on the US wallet. So you click on fund, and you input the amount. So when you need to review this amount, then you can choose the banks which I've mentioned earlier: United Bank of Africa, Zenith Bank, and GTB. You can also find the details that you require. So you would see it has to come in your name. So you would find the details that you need to input for the transfer into the account. And once that is done, you also need to upload the evidence of payment on the platform. And once you do that, once we confirm the payment is from you, and we see the evidence of transfer, it will also be approved within 24 to 48 hours. Secondly, we've also partnered with licensed bureau de change, that's BDCs, that helps facilitate some of our dollar transactions. So which means that you may not need to go out to source for dollars. So you can transfer Naira into your Naira wallet using whether your dedicated virtual account or using your card to make payment. So once you have that in your wallet, you come to swap. So we call it changing your Naira to dollar. So you always see the exchange rate. The buy rate is at the rate which you convert Naira to dollar, and the sell rate is at the rate at which you convert your dollar to Naira. It's also good to note that the valuation that we use on the platform is always the sell rate, which means that which is the rate at which, if you want to take out your funds, that is the value that you will get. The value you can see is what you would get. Yeah, so once you're able to do that, you can swap. You put in if I'm going to just test it now. If I'm going to swap, so just swap from Naira to to dollars. So you would see, so within seconds, your dollar wallet would have been credited, means that you now have dollars. And this fund, you can always take it in dollars. The if you know except if the value of your investment, because of transfer charges, for those that are into dollar transactions, you will know it's expensive to move dollars in Nigeria. So it's only for Naira we bear all the cost on your behalf. So we don't charge customers for Naira transaction, but for dollars, at the point of withdrawal, you would be required to pay the dollar charges. So if the value of your investment is not significant, what we recommend most times is you can also swap back to Naira and take the money to your Naira account. So now I funded my Naira and my dollar account, which means it's available for investments. And if I now want to save in dollars, you have your Optiflex account, which you have the Optiflex, which is the Naira. You have the Optilock Naira, and the Optilock Naira you can enjoy as high as 20%. Means you lock in your fund. Like Victoria said earlier, we don't expect the interest rate to continue to remain this high. So when you are locked in, it is what you lock that you get. Even if rates decline tomorrow, if you're already locked in at a particular rate, it will not affect you. It's only the new investment that you bring in that it would affect compared to Optiflex. But the way you see Optiflex is like high yield savings account. This money, I have access to it anytime. If I've been, when you look at it, if you invest in CPs, commercial papers, treasury bills, for instance,